He kōna I purangi tēnei nā te reo irirangi o Aotearoa.
How can you get a rent reduction? Who pays for a funeral if the estate doesn't have any money? And who's getting the interest on a rental bond payment that's sitting untouched for years? Those are some of the questions we'll tackle on this week's No Stupid Questions, the podcast that's not afraid to ask the big money questions, as well as delve into 2-minute noodles and wine cooler. I'm Susan Edmonds, I'm RNZ's money correspondent. I'm joined by Justin Gregory.
I still like 2-minute noodles. I've the spicy ones every now and then.
The spicy ones are the best, I have to say.
Easily.
So the kids are back at school.
Thank God for that.
Holidays are a distant memory. Shall we just get into it?
We will. Okay, first question this week is from Suzanne. It basically boils down to, what can I do if I think I'm paying more than market rent? Suzanne says she lives in a 1-bedroom granny flat and she was only paying $90 a week in rent. But now the landlord has done it up a bit. It has 2 bedrooms and a study. It does sound like some of the conditions there with water and power are still not ideal though, and she says there's no lounge, there's no driveway, and there's no letterbox. But the landlord now wants to charge her $540 a week. What can she do, Susan?
Well, to answer this one, I thought we need to focus on just the what can I do if I'm paying more than market rent, because there probably are some other things going on here, but I think that's the key part of her question. So I talked to Serena Gibbon from Tenancy Advisory. Serena says a good place to start is to try to talk to your landlord about the situation and see if they are willing to negotiate.
I strongly encourage everyone to use legal mechanisms and levers as last resort. Use common sense and negotiate, recognize the condition of the market at the moment, figuring out what are the levers that you can press with this particular landlord, right? If you have a landlord who you know have been landlording for a long time, you don't get the signal that they are very cash strapped. They probably have a bit more capacity to stomach a lower amount of rent just to keep you because you're a great tenant. Right? Because the alternative is they got to gamble this on somebody they don't know, can't even guarantee themselves that they can get the same amount of rent that they're already charging you, right? So sometimes it's for landlords is figuring out which one is the less, or I don't want to be characterizing tenants as evils, but it is about figuring out which one is the least bad option. So I would negotiate first. I also think, sometimes it's around being prepared to move along. The great thing for tenants at the moment, it's not so great for tenants at the moment still, but the benefit for tenants at the moment is for the first time in a very long time, tenants have more options. They have more properties they can move into, right? We still have a very weak and sluggish demand because a lot of people are moving to Australia and leaving New Zealand. We have a cohort of rental properties that's being kept on the market because the housing prices are still quite low and landlords are waiting for the right time to put them back on the market to sell. So there's still that supply side is still quite it's still quite strong compared to the stripping away of demands. So tenants need to just be aware, like if you're gonna negotiate, you got to be prepared to leave. You got to be prepared to exercise your options.
What if you tried that though? What if negotiating doesn't work?
So if it doesn't work, you can ask for the Tenancy Tribunal to intervene. But to do that, your rent needs to be substantially over market rent. You need to make an application under Section 25 of the Residential Tenancies Act.
One of the mistakes I see tenants make when they make a market rent application is, number one, they think that as long as their rent is over market rent, so if market rent is $500 and they're paying $501, they think that gives them basis to make an application. Okay, that's not the basis. The basis is the rent has to be substantially above market. So we're talking if it's $500 market rent, you're not going to get relief from the tribunal unless you're being really charged like $550, $600. Okay, in order for it to be a breach of the RTA, it needs to be a substantial premium above market rent. So that's number one. Number two, or I should say point B is sometimes tenants also forget when they are making a market rent application, they need to be looking at the market rent at the time the contract was entered into. We're in a declining rent market, right? So if I signed a rental agreement last year at $500, and the market rent last year was $500, but this year it's gone down to $400, not give rise for relief under the RTA. So it's got to be linked to what was market at the time of the property, the contract was entered into.
So if you are going down that route, you just need to have the right information. Our next question is one that I feel a bit silly for never having actually thought about before.
Astrid wants to know who gets the benefit of money being held as a bond. I've never thought about this either. She says tenants usually need to pay a bond if they rent a property. The bond is paid to the tenancy service, and if the tenants move out, they get the bond back if everything is in order in the rental property, but without any interest. So if someone is renting for 10 years, they're losing out on that money. In my opinion, says Astrid, this should not be legal. I am originally from Germany, says Astrid, where the bond is paid to the landlord and the landlord is required to pay it into an account that pays interest. Interesting.
Yes, it is really interesting. MB tells me the Residential Tenancies Act 1986 requires MB to deposit all money received from tenancy bonds into the Residential Tenancies Trust account, and that account is invested in term deposits. And the interest from this partially funds MB's work under the Residential Tenancies Act on things like dispute resolution services, education, advice and enforcement activities.
So the government gets it, basically.
Yes, the government gets it.
Now, change of pace to a more sombre topic. Joanne wants to know what happens if a parent dies and there's no money at all to cover their funeral costs.
Yeah, this is something that's actually probably more common than you might think.
Well, that's a bummer.
It is. It's usually the job of the person who's the executor of the estate to organise the funeral. So often, but not always, that's one of the children. Citizens Advice Bureau advises that banks will release money from the person's account to pay for a funeral without probate or letters of administration or any of that sort of thing. But if that's not going to help because there's no money, then the executor of the person who organises the funeral generally becomes liable.
There must be some other options, though. Are there any other options?
You might be able to apply for a work and income funeral grant, which provides up to just over $2,600 to help with the costs. But from what I have seen, this is unlikely to cover it all, although I have been told that it is possible to do it quite cheaply if you know where to look. Apparently. I don't want to delve too deeply into that.
No, let's move on.
Yes. You also might be able to apply for a withdrawal from your KiwiSaver fund if the cost is going to put you into significant financial hardship. I would use that as a last resort, though.
Switching it up again, Barry, he asks, I have a large sum of money to invest, good on you Barry, but I'm not sure where to invest it. I don't want to lose it to scammers. He was thinking precious metals maybe?
This is such a big question. If he has a large sum of money, I'd say the best thing he could do in the first instance is to get some personalised advice on that.
Which you're not going to get on this program, Barry.
That's right. You can go to an independent financial advisor or go to your bank for advice. But generally, in general terms, not financial advice terms, if I had a large amount floating around doing nothing, which I do not, but we can all dream, I'd probably put a good chunk of that into a fund. For me, it would be skewed towards growth assets because I'm clinging to the idea that I'm young and I have a while to ride out market movements.
Fair clinging. Who's going to do that for you then?
You can do that through a platform like Kernel or Sharesies or the fund managers you've seen offering KiwiSaver like Milford, Simplicity, so on, or you can do it through your bank. I'm all about growth investing, but I know my parents, for example, put some money into a conservative fund because they didn't want to see huge swings in their balance, but they did that after, straight away after they did that, the markets went down and I felt really bad until they started to pick up again.
Yet another reason why this is not a program giving
right.
Personalised financial advice. Cool, but is this going to keep Barry and everyone else safe from scammers, Susan?
Well, the best way to avoid scams, in my opinion, is to only deal with financial providers who are registered in New Zealand. So organisations that have physical addresses here that you can go and turn up at if you need to. They should also be on the Financial Services Providers Register. So don't go with people who cold call you or approach you online or give you a big, heavy sales pitch. Always think a good investment shouldn't need a big sales pitch. And as for the precious metal idea, this has been a really hot topic this year. Gold prices and even more so silver have really shot up.
Yeah, and we've already talked about them before, haven't we?
Yes, we have. Last episode, we talked about it because you can invest in gold, but I'd be wary about buying the physical stuff. You need somewhere to store it and insure it. You can buy shares in gold mining companies, and there are some gold exchange traded funds that take the admin out of investing in gold if that's what you want. It's also worth noting that even though gold can go up and down in value, it doesn't give you any income stream like most other investments do. But yep, if you have a large sum of money, go get some advice from a professional and a regulated one.
And not us, not Susan, not me, because we're not giving personalised financial advice.
Nope, just daydreaming about what we would do if we were in your situation.
And if I was young too. Two questions. We can deal with them both very quickly because they're both based on misunderstandings, might be the polite way of putting it. Roger asks, I've heard that funds are not all that secure with KiwiSaver. Apparently they get scammed big time. Is this true, Susan?
No, there haven't been any. No, it's not.
And on to the next question. Right.
Yeah, there haven't been any KiwiSaver funds that have been scammed. There have been funds that have seen their balances drop, but that's not a scam. That's just the market moving. Your balance can go up and down when you're investing.
That's really good news, but and don't get me wrong, why haven't KiwiSaver schemes been scammed?
So KiwiSaver has layers of protection that help people avoid scams, in fact. I asked David Callanan, who's Public Trust's General Manager of Corporate Trustee Services, about this, and he breaks it down like this. Assets in KiwiSaver schemes are held in a trust, meaning they're not directly owned or held by the KiwiSaver provider itself. Every registered KiwiSaver scheme in New Zealand is required by law to have an independent licensed supervisor, like Public Trust, overseeing them, and then a custodian holding the scheme assets in safekeeping. So supervisors and custodians play an important role, he says, in looking after investors' interests and ensuring providers operate responsibly. He says in Public Trust's role as a supervisor and custodian of KiwiSaver schemes, it's aware of a small amount of KiwiSaver-related scam activity, for example, where a person might be trying to access their own or another person's KiwiSaver money fraudulently. But he says Public Trust works with KiwiSaver providers and industry bodies on identifying and managing risk around this type of fraudulent activity. The FMA and KiwiSaver providers share practical guidance for KiwiSaver members through their websites on how to identify and prevent being a victim of scam activity. He says we haven't seen any fraudulent activity involving a KiwiSaver provider fraudulently taking a member's KiwiSaver funds.
Nice to hear. Speaking of scams, you had a story recently about a guy who lost a lot of money buying a car online.
Yes, he bought it and then it turned out to be stolen, so he lost $35,000. But as part of working on that, I talked to Consumer.
Consumer who?
Consumer New Zealand. They are
Right.
advocates for consumer rights, I suppose you'd say. And Consumer said they think we need better scam protections in New Zealand. Although the banks did improve their systems last year, now we've got that confirmation of payee thing that you see when you make a payment to someone new. There are still gaps.
Like what? What gaps?
They say there aren't enough protections for people buying online from places like Facebook Marketplace, and those platforms need to take more responsibility for what happens on them. At the moment, you're kind of on your own there if you get scammed.
It's pretty common too, isn't it? It happens a bit.
It does feel like every time I log in, there's a post in one group or another about someone buying something that never turned up or something like that. It's pretty tough. I think if you're buying anything expensive, you need to be able to meet up in person to make it happen. But then there are questions, I guess, about whether you actually want to meet Facebook strangers in real life.
Now, another question where there might be a bit of confusion. Andy asks, I turn 65 in May. A friend told me I will get less on the pension as I have $85,000 in KiwiSaver. Good on you, Andy. I see there is a limit of $8,000 you're allowed to have. For the last few years, all I read is that you must save for your retirement. I made a lot of sacrifices to get my KiwiSaver balance where it is. Now it appears the government penalises you. Is that right, Susan?
No.
Ah.
No, so that 8,000 limit is for the accommodation supplement, not the pension.
So you're all good, Andy. Keep on saving. Rightio, that brings us to the end of this episode, or very nearly anyway. Last week, we asked you when that student diet staple, and apparently mine and Susan's staple too, 2-minute noodles was added to the Consumer Price Index. Susan, what's the answer?
Well, that all carbohydrate, all sodium, basically nothing else treat
Say
was
that
added.
like it's a bad thing, Susan.
Yeah. It was added in 2002. I think my brother's consumption through the late 90s might have helped that happen.
And I helped a little bit too. But anyway, now our question this week relates to Lego, which I've recently learned to pronounce that way, having grown up calling it Lego for 50 years. But anyway, is Lego a good investment? And what kind of returns can you expect to get from those little plastic blocks? God, I've never thought about this before. I need to stop the puppy chewing on ours, clearly.
Yes, because it will also give you a really expensive vet bill if you're not careful.
Oh, true.
Yes, but send your answers as well as any questions you have to questions@rnz.co.nz. No Stupid Questions with Susan Edmonds was written and presented by Susan Edmonds. That's me. Justin Gregory is the producer. The engineer is William Saunders. Thanks to Suzanne, Astrid, Joanne, Roger, Andy and Barry for their questions, and Serena Gibbon for her answer. Follow and listen to No Stupid Questions with Susan Edmonds on Apple Podcasts, Spotify or any podcast app so you don't miss an episode. Bye for now.